Okay. When it come to the yesterday class, ma. Wait a minute. Okay, guys. Very good morning. Okay. So in yesterday class, we discussed a topic of introduction regarding to the budgetary control, right? So let us revise quick revision for previous class. So when it come to the main important thing is methods and techniques, right? So when it come to the techniques is our discussion. Okay, see, techniques are classified into three words: decision making technique, cost control technique, planning and coordination technique, right? So when it come to, if you need to understand the concept of decision making, you have to learn a chapter name called marginal costing. When it come to the cost control technique point of view, you have to learn standard costing chapter. Next, the planning and coordination point of view, you have to learn the concept of budget and budgetary control. Okay, then fine. Now I explain the difference between budget and budgeting and budgetary control. So the three are different words, not same words. Budget means the plan we prepared for future. What is a budgeting, ma? Preparation of what we decided is known as a budgeting. So checking with the actuals, comparison and differences, find outing, these all kinds we doing in budgetary control. Okay, then fine. Next, ma. When it comes to the budgeting is a word we are using in a lot of places. The important places are individual point of view, government point of view, business point of view. So there is no discussion regarding to the individual and government here. It is a discussion regarding to the business. Okay. When it comes to the theme of budgeting, I understand. Yeah, Upendra, good morning, ma. So the theme of the budgeting control, we understand that based on that comparison of budget planning and actual, either we need to plan selling price related issues as well as profit related issues. Either you have to sacrifice your profit, either you have to compute your competitor with quality. Okay, next. When it comes to the classification of budgets, ma, so we have a 3 types of classification based on time. Wait, ma. So the classification based on 3 ways. The first one is functionality on the base of time and the base of capacity. Again, the functionality concept subclassified into master budget, functional budget. On the time point of view, the generally short term as well as long term, but for MCQ purpose, they provided sometimes current budget also. Next, when it comes to the capacity point of view, fixed budget and flexible budget. So let's tell me what is the meaning of master budget, ma? So summarize of all production budgets is known as master budget. What next, ma? Functional budgets. So your preparation of budgets for the purpose of individual activity or individual function is known as functional budget. There's an issue. Next, ma, when it comes to the functional budgets are classified into some more activity budgets. What are the some more activity budget? Sales budget, production budget, raw material budget, labor cost budget, overhead cost budget, cash budget. Apart from this, there is another concept name called capital expenditure budget, ma. Capital expenditure budget. The word capital expenditure talks about long run, not short run. Okay, the long run decisions we are taking under financial management called FM, paper number 11. Okay, that's why I'm not discussed here. Capital budgeting, I'm sorry, the word called long-term planning, that is nothing but capital expenditure budget. Okay, then fine. When it comes to current budget, means for less than 1 month or current period preparation budget is known as current budget. What about the short-term budget, ma? Less than 12 months point of view, if you prepared anything, if you planned anything, that is called what, ma? Short-term budget. What about the long-term budget? Just okay, so then when it comes to the fixed budget and flexible budget, ma, fixed budget and flexible budget. What is a fixed budget and flexible budget here? Preparation for single level of activity is known as fixed budget. Preparation of multiple level of activity is known as flexible budget. The level is nothing but capacity. The level is nothing but what, ma? Capacity. Okay, then fine. So the discussion we did in last class, right? Next, when it comes to the exam point of view, we are mainly focusing on particular areas. One is production budget calculation and cash budget calculation and flexible budget calculation. Now there is another type of questions, ma. They will club two concepts: raw material concept, production concept. They club two concepts. They will ask a question. Ask a question. Next, when it comes to this is a calculation part and exam related information. So first you have to figure out sales units. That is nothing but sales unit budget. Sales unit budget. Next, you have to figure out sales value. That is called sales value budget. Now sales units is nothing but demand forecasting or estimations based on the past information. Okay. Next, when it comes to sale value, we already estimated units. If you multiply with per unit selling price, you will get a sale value. Next, production budget. So sale units and production units are both are not same. It's same in some situations. In remaining all situations, it will not same. Guys, clear? Why? Because there is a opening stock and a closing stock. If you adjust that opening stock and closing stock to sales, you will get a production. If you adjust, so where are we discussing? Production there. Yeah. If you adjust opening stock and closing stock to sale units, you will get a production. If you adjust opening stock and closing stock of finished good to the production, you will get a sale units. Yes or no? No? So that's a concept I showed in a P&L point of view or a trading point of view. Next ma, calculation sale units plus closing stock minus opening stock. Next ma, after find outing the production, you have to plan for raw material. Without raw material, you can't do produce a commodity, right, or finished good. For the purpose only, you have to calculate raw material requirement. So the raw material requirement is nothing but how many units needed, how many units we are planning into usage of the raw material. You will get a raw material requirement. Next ma, raw material consumption. The consumption is a word is nothing but usage. How many kgs of raw material are used for manufacturing of one commodity or multiple commodities. That's set by raw material consumption. Here also you have to adjust two things ma. What are the two things? Opening stock and closing stock. For the elements of two, the two elements name is called raw material purchase as well as raw material consumption. Wait a minute. Live all okay. Okay ma, when it comes to here, the two elements is there, raw material consumption and raw material purchase. If you adjust opening stock of raw material, closing stock of raw material to purchase of raw material, you will get raw material consumption. If you adjust opening stock of raw material, closing stock of raw material to consumption, you will get raw material purchase. Clear? Next ma, labor budget. Here also we have to calculate with the help of production units. For 1 unit of production, how many hours of labor is needed? That is called labor usage. Production into number of hours required. So you will get number of hours. If you multiply with rate of per hour, you will get labor cost. Next ma, overhead budget. When it comes to the overhead budget, here's a classification of two, variable overhead as well as fixed overhead. Next, cash budgets. So every company have a opening cash balance. If don't have, but don't worry, receipts and payments. If you have a opening balance plus receipts minus payments. That is a cash budget preparation. So we solved two problems regarding to production budget, right? Different level of activity, flexible budget. Yes, super. Chandrasekhar. So where we are, ma? Problem number 28. Huh? Put a 3-star for this problem, ma. 3-star. Not that much of difficult this problem. Easy only. Just based on understanding only we can calculate this one. Not the exam standard problem, but important. Illustration number 28. Illustration number 28. A budgeted production and a production cost for the year ending 31st December. The words are very, very important, ma. Are the follows. It means what are the table they given that is related to which month, ma? December month. 31st December means December month related information. Product A, product Y. Now product A, product X and product Y is a finished good or raw material, ma? Finished good or raw material? Finished good. Very, very important. Here sometimes they will use unit for raw material. Sometimes they will use kgs for raw material. Don't confuse. Are you okay? So if they provide unit means don't decide it is a finished good. Based on information only you have to decide. Sometimes raw material point of view also they will give a name called unit, not kgs. Okay. Now, but it is a information related to what ma? Production units of X, Y. It means say they are finished goods. 220, 240. Next. Direct material per kg or per unit? Per unit, very, very important terminologies. 12.50, 19. Direct wages per hour or per unit? Per unit. 4.57. Next, total factory overhead for each type of product. Totally what kind of thing? Variable. Okay. Shall I find out per unit? Per unit. How you get per unit? Variable cost per unit equals to 6,60,000 divided by 2,20,000. How much ma? 3 rupees. When it come to the product Y ma? 9,60,000 divided by number of units 2,40,000. What ma? 4 rupees. Per unit only na? Why per unit? Amount divided by number of units. Amount divided by number of units. Okay. A company is manufacturing two products X and Y. I said na, producers means finished good. A forecast about the number of units to be sold in the first 7 months given below. So what are the information it is? Production related or sales related? What ma? There is a clue we have, sold. Okay. Now the product X related 7 month sales is there. Product Y related 7 month sales is there. Okay, then fine. When it come to, it is an anticipated that there will be a no work in progress. There is no discussion of work in progress concept. Forget about that. Next. Finished units equal to half of the sales for the next month will be stock at the end of each month, including December of previous year. So if you crack this point, your problem is completed. The only thing is the point number 2, additional point number 2. Okay. Okay, I will give a clarity for that point. Now I understand that is the information related to stock. Why? Because for a sale units, if you adjust stocks, you will get production units. That is their question asking here. So prepare for 6 months ending 30th June production budget and summarized cost of production budget. Two things they are asking. What are the two things they are asking? Production budget means production units. As well, they are asking about production cost. Production units into per unit cost is given in the December month related information. If you multiply with production units into cost per unit, you will get what cost? Production cost. Do you understand why the first box is given? For the purpose of cost calculation. That is the purpose I calculated variable cost per unit. Are you okay now? Now, first we have to figure out what? First we have to figure out what? Production budget. How do you calculate production budget? Units of sale only, na? Sir, what about this production of 2,20,000, 2,40,000? You are preparing production budget. They provided already 2,20,000 production units for X or 2,40,000 for product Y. What about that? Sir, that is a information, is a past information for the purpose of calculation of variable cost per units. Okay, they're asking a question, please prepare budget for next 6 months. Jan, Feb, March, April, May, June. Do you understand? Okay, so don't confuse. So we are using our knowledge of sales plus closing stock minus opening stock. We are calculating production units for the purpose of next 6 months. What are the 2,20,000, 2,40,000 given in the question is a past information regarding to the December. Are you okay now? Now, now come to this point. Additional point number 2. Finished units is equal to half of the sales for the next month. It means for January, 10,000 is the sale units. For that January, closing stock is 12,000 into 50%. Yes or no? No? Why 12,000 into 50%? Next month the sale 50%. That is a closing stock. The word said at the end. End means closing stock only, na? Okay. Next, 12,000 is the sale for February. Closing stock is 16,000 into 50%. Okay. For March, 16,000 is the sale units. Closing stock 20,000 into 50%. For April, 20,000 is the sale units. What about the closing stock? Next month, 50%. 24,000 into 50%. Next, for May, 24,000 is the sale units. What about the closing stock? 24,000 of June into 50%. When it comes to the June, 24,000 is the sale units. Are you clear? Now, what about the closing stock? 20,000 into 50%. Up to here is sufficient. Why? Because they are asking up to June only. Guys, clear? Sir, okay, up to June. Why they provided July means for the purpose of closing stock. Next month 50%, na? Okay, then fine. Closing stocks, okay. Opening stocks. Opening stocks. Common sense. Sir, December closing stock is a opening stock for January. January closing stock is a opening stock for February. Yes or no, na? Okay. It means February closing stock is a opening stock for March. March closing is a opening for April. April closing is a opening for May. May closing is a opening for June. Now what about the January? December. Where is the December information? Where is the December information? These are not a sale units. They are production units. Okay. Or tell me some. No Telugu చెప్పు ఇబ్బంది ఏం లేదు. Just a common sense is what అబ్బాయి చెప్పేది exactly is right answer only. Just a common sense is involved. Tell me, Nana. Exactly, that is a logic. Common sense is what, ma? December closing stock is what? December closing stock is what? Calculation. Next month 50%. What is the next month here? January. It means 10,000, 5,000 only, na? December 5,000 closing stock is a opening for what, ma? January. That's problem is completed. Any doubt regarding this, ma? Next, after completion of this, you will get what, ma? Production units. Sum of all 6 months, you will get total production into 12.5 rupees. You will get direct material cost of production. Into 4.5, you will get a cost of production regarding to the wages. Into 3 rupees, you will get a variable cost. Total is known as cost of production for X. The same thing you have to plan for Y also. Okay. I will present here. Okay, then fine. What is the problem number, guys? Must start writing, ma. Start writing, not stop. So, okay, when it comes to the problem number 28, what is the first question? What is the first requirement, ma? Preparation of production budget for next 6 months. Preparation of production budget for 6 months from Jan to June. Particulars. I said already in yesterday class, presentation is very, very key role. I think particulars are few things. Months are lot of things. That's why I'm planning vertically. Particulars, not particulars. Period. Sales. Closing stock. Opening stock. So you will get a production amount. Production. If you want, maintain a total column. Why? Because they're asking a total cost of production, na? Total cost of production they're asking. That's why I want a total units. Okay. Now that's why I'm maintaining a total column also. If you are not comforting with this table, go with the vertical table. That is nothing but particulars, sales, closing stock, opening stock, production, total in a vertical point of view. Jan, Feb, March, April on horizontal point of view. Okay. Now Jan sales, please, ma. For preparation of production budget for 6 months from Jan to June of product X, ma. Sales, ma. Feb, what, ma? 12,000. March, ma. 16,000. April, 20,000. May, 20. June. Now, what about the closing stock, ma? Half of the next month sale. Tell me. 12,000 into 50%, 6,000. 16,000 into 50%, 8,000, 10,000, 12,000, 12,000. What about the July sales? Means 10,000. Okay. What about the opening stock, ma? 5,000 only, na? Why 5,000? December closing stock is opening stock for January. Now I know December calculation. The December calculation is nothing but next month 50%. Okay. Next. So this same amounts will be reflected here. So Jan closing is 6,000. That is the opening for February. 1,000, 8,000, 12,000, 12,000, 10,000. Now please tell me the production, ma. Any confusion regarding the opening stock, ma? Last month closing is nothing but next month opening. Production, please. Production. $11,000. What about the February? 14,000. What about the March? April? What, ma? 24,000. Again 24. Next, ma? 20. 20,000. Now please tell me the total, ma. April. What, ma? అర్థం కాలేదు నాన్న. April. 10,000. What about May? 12 only, na? And June? 12. Now please tell me the production changes, na? April 22,000. May 24,000. June 20,000. Now tell me the total. One lakh. 1,11,000. Okay. So I'm just changing the names, ma. But when it come to you, go with the individual presentation of X and Y. So I will present here itself. If it's completed, please start a product Y. But I will present here itself. Completed. So tell me the sales values, ma. 28,000. Again 28,000. Okay. 24,000. 20,000. 0. 16. 16,000. Again 16,000. No? Now please tell me the closing stocks, ma. Fourteen thousand. 14,000. 12,000. 10,000. 8,000. What about the opening stock, ma? December closing stock value is nothing but opening stock for January. But there is a no calculation regarding to the opening stock directly. There is a calculation for closing stock. Okay. Now what is the answer? 14,000. Now what about the next one? 1 minute. Now tell me, ma. February opening stock for why? What's the issue, ma? Any wrong calculations? 28,000 into 50%, 14,000. Okay. Next, 12,000 కదా అవుతుంది. Who said this? 12,000 here. Next. Next. 8,000. Next. 8,000. Next. 9,000. How this 9,000 is came? July sales into 50%. So don't confuse. Don't tell me the wrong values, ma. Okay. Now when it come to the stock opening stock, ma. So 28,000 into 50% right only, no? Okay. Next, dump the this values of closing stock. 14,000. Next. Again. Already I recorded, ma. Jan completed. 12,000. 10,000. 8,000. 8,000. Now okay. Now please tell me the total production values. 28,000. 26,000. Next. 18,000. 16,000. 17,000. Hey, one value is missed, ma. February, Jan 28, okay. February 26, okay. April, March 22, one value missed, 22. Next, 18, 16, 17. Now please tell me the total. 1 lakh, 1 lakh, 27,000. Sir, you can present like this also, sir. But you have to maintain clarity. X, Y, X, Y, X, Y, X, Y. Another column you have to take. For each and everything, we are calculating two things: X, Y, X, Y, X, Y. Okay. So we have a multiple presentation styles, but we have to plan based on the exam time. You have to present questions in within 3 hours only, no? Okay. Next. Second question is there, Nama. What about the second question? Preparation of production cost budget. Particulars, product X, product Y. So when it come to first one, units. What about the product X units? 1 lakh 11,000 units. Now what about the Y? 1 lakh 27,000. Next. Raw material cost at the rate what? Two things is given. For X 12.5, for Y 19. You have to specify that. Now please tell me the X calculation. 1 lakh 11,000 into 12.5. Answer. 13 lakh 500. What about the Y? 1 lakh 27,000 units. What about the per unit? 19. Answer. 24 lakh 13. What cost next? Direct wages. So here also they provided per unit. I know units. 1 lakh 11,000 units. What about the per unit of wage cost? 4.5. Answer. When it come to Y, 1 lakh 27,000 units. What about the per unit wage cost? 7 rupees. Answer. 8 lakh 89,000. Any other specific cost? Variable cost is there, na? Factory overhead. Factory overhead cost. 1 lakh 11,000 units. What about the per unit? 3 rupees. How much? 3 lakh 33,000. Next, when it come to here, 1 lakh 27,000 units. Per unit how much? 4 rupees. Okay, done. Answer. 5 lakh 8,000. So all cost we consider regarding to the production, right? Now please submit. What's the name for this values? Cost of production or production cost. You can name it as whatever it may be, but the theme is only cost relating to the production. production cost. Production cost, please. 13,87,500 plus 4,99,500 plus 3,33,000. 22 lakh 15,000. What next? Product Y. Why ma calculation mistakes? See, check. 13,87,500 plus 4,99,500 plus 3,33,000. How much? 15 na? Okay. Don't do these mistakes ma. I mean live ma. When it comes to the product Y. 38 lakh 10,000. Okay. Here you have to express two things to the valuationer. One is how you consider closing stocks and opening stocks explanation, as well as how these 3 rupees and 4 rupees came. You have to present. Note 1. Closing stock equals to 50% of next month sales. That's only enough. Note 2. Opening stock equals to closing stock of December. Closing stock of December. Now we know how to calculate closing stock of December. How to calculate closing stock of December? 50% of January sale. So if you want, go with the numbers also. 0.5 into 10,000. That equivalent to 5,000. What about the Y? 28,000. That equal to 12,000. Now that's why I mentioned in red color here. Okay. 14 na? Next ma. Note 3. Variable cost per unit of X equals to amount, or go with the variable cost divided by number of units. X. What about the variable cost of X ma? 6,60,000 divided by 2,20,000 units. What about the per unit? 3 rupees. Y. 9,60,000 divided by how many produced units in December? 2,40,000. What about per unit ma? This is a full presentation for this problem. Smart classes. Sir, it is not a revision series, sir. It is a regular class. So live only for 10 classes, sir. Completed ma. Next. Not 29. 45. Okay, Nana. Illustration number 45. Here also put a 3-star mark. The basic question only, ma. If you understand there is a only difficulty is wages calculation. Remaining all things are bacha things. So here you can observe the entire question. They're not asking about the units. They're only focusing on rupees point of view. That is nothing but production cost point of view. Okay. Previously we discussed the topic of units. Here there is no discussion of units. They're just asking about the rupees point of view. Okay. Let us check ma. Illustration number 45. Production cost of a factory for a year are as follows. Direct wages 80,000, direct material 1,20,000, production overhead. In this production overhead, two things is there. Fixed cost as well as variable cost. Fixed cost is 40,000, variable cost is 60,000. Okay. During the forthcoming year, it is an anticipated that point A, the average rate of direct labor remuneration will fall from 0.8 per hour to 0.75 hour. So the point they're saying that previously they're paying per hour 0.8. The next you are planning, you have to consider 0.75. Now if you want rupees, number of hours into 0.75, you will get an answer. But in this question, they're not saying that number of hours. If they say, we can easily calculate number of hours into 0.75 into number of hours. But there is a no number of hours. Now how I calculate means simple. For 80,000 rupees, they're already paying 0.8 rupees per hour. Now they're asking about 0.75 is a reduction value. Now how much is a rupees? 70? Do you understand the logic behind the calculation? If you have a number of hours into 0.75, there is no number of hours. Okay, that's why I calculated with help of comparison. For 0.8 rupees per hour rate, the amount they're paying 80,000. Now they're saying that rate will be fall to 0.75. At the time, how much they're paying means 75,000 rupees. Are you okay now? Point B. Production efficiency is currently at 5% less than whole capacity. What is meant by whole capacity? I said yesterday class only. The whole capacity is nothing but total capacity 100%. Now, understand the meaning. Production efficiency is currently at 5% less than whole capacity. It means what are the amount they is paying 80,000? It is not equal to 100%. It is equal to what? 95%. Is equal to 95%. Okay. It means here also I need to calculate 80,000 rupees for 95% capacity. I want for 100% capacity. $80,000 into 100 divided by 95. How much ma? 84,210. Next. The price per unit of direct material and other materials and services which comprise overheads will remain. So there is no discussion of 1,20,000, 40,000, 60,000. There is only discussion regarding to wages. Okay, I have a question. Sir, this efficiency calculation you checked only when it comes to the point A. This specially mentioned labor related wage rate. When it comes to the point B, there is no specified regarding to the wages or labor. Then why you are calculating to 80,000? Why that point B you directly calculate into 80,000? Why you are not using for material? Why you are not using for a production variable overhead? Why you are not used for production fixed overhead? Because of the word unchanged, huh? No. After calculation only, I identified that word unchanged. క్యాలిక్యులేట్ చేసిన తర్వాత చూసాను నేను అన్చేంజ్డ్ అనేది. బట్ ముందే నువ్వు ఎలా డిసైడ్ చేసావు ఎఫిషియన్సీ అనేది ఓన్లీ వేజెస్కి క్యాలిక్యులేట్ చేయాలనేది? కామన్ సెన్స్. ద వర్డ్ ఎఫిషియన్సీ కేమ్ ఇన్ labor only. How effectively they works. Are you guys clear? That's why the efficiency is an adjustment for wages. Efficiency is an adjustment for what, sir? Wages. Are you guys clear? Point D also is there, ma. Production in the coming year will increase us by 33.1/3%, ma. That is one. There is nothing about 33.333 bar. 33.33 bar. So what is the meaning for this, ma? What is the meaning for this? What are the budgeted information they provided that is equivalent to 100%? Now we have to start for 133.33% budget. We have to prepare 133.33%. Now my point is, in wages 80,000 for 100% capacity, but you have to revise for what? 133.33. Yes or no? Next, material also 1,20,000 for 100% capacity. I want for 133.33%. Fixed 40,000 into 133.33%. 40,000 fixed. Yes or no? 33.33% is increases, na? Yes or no, ma? No, ma. Because it is not change with change in level of activity. Are you guys clear? For 100% only 40,000, for 33.33% extra also 40,000 only. When come to the 60,000 for 100% capacity, now you have to increase 33.33%. Are you okay now? Now the only thing is wages calculation. For wages you have to do 3 adjustments. One is level of increment 33.3% you have to increase. Next, the rate changes is there now, that you have to adjust. Next, efficiency also you have to adjust. I said already for this problem, wages only difficult calculation, remaining all are bacha things. Now if you do like this, that is not a correct presentation. Why? Because if you add this two, the 80,000 added 2 times. That's why now see the calculation. 80,000 into 0.75 divided by 0.8. This is the adjustment of wage rate. Next, 100 divided by 95. This is the adjustment of efficiency. Into 133.33 bar percentage. This is the adjustment of production increment. Are you guys clear? So you can go with any order, you will get same answer only. If you adjust first efficiency, then you go with the rate, and then you go with the capacity, it will give you same answer. For this any order you can write, you will get same answer only. Okay, ma? Now what is the answer? 80,000 into 0.75 divided by 0.8 into 100 divided by 95 into 133.33%. 1,05,260. This is the exact wage for next planning. Next, ma, this is about wages. Raw material is there, na? How much is the raw material? 1,20,000. What is our planning? 33.33% increment. Now 1,20,000 into 133.33% increment. Go with the bar, then you will get exact value. 1,60,000. Guys, clear? Sir, here there is no calculation of efficiency. There is no adjustment of efficiency for raw material. There is no adjustment of efficiency. Why? Because efficiency only adjustment for labor, not for other things. Do you understand? Next, sir, any rate changes for raw material? Any rate changes? That's the point he said. There is no rate changes, unchanged. Are you guys okay? That's why I adjusted only capacity change. Next, when it come to production overhead variable, 60,000 into capacity changes, variable cost also changes, na? 133.3 bar. What, ma? 80,000. Now production fixed overhead, ma? 40,000 only. Now please tell me the total, ma. 1,05,260 plus 1,60,000 plus 80,000 plus 40,000. 3 lakh. This is the production cost planning. This is a production cost planning. That's a word they're asking here. Draw up production cost 3,82,263. Yeah. Why the differences came? Because of decimals. Because of decimals. We consider total values. They consider round off values. So come to the presentation. Ma. What's the problem number it is? What is the requirement, ma? Preparation of production cost budget. So what's the first one, ma? Wages. Now tell me the working note for wages. 80,000. First you have to adjust rate 0.75 divided by 0.8. The rate adjusted. Next you have to adjust efficiency. So 10% decrease. There is the word they said 5% decreases means it is equivalent to 95%. But I want for 100%. Why? Because my output need to increase 33.3% means on 100% level of activity. That is mean 100 divided by 95. It expresses efficiency adjustment. After that you have to consider incremental level of activity, that is nothing but 33.33% into 133.33%. Value of answer, ma? 1,05,263. If you apply this only 133.33, if you apply 3 bar you will get round of value. Okay, 260. Okay, next raw material, ma. What about the raw material value, ma? 1,20,000. 1,20,000. Any rate adjustment, ma? Rate adjustment. Why? Because they said unchanged. Okay. Any efficiency adjustment, ma? Efficiency only for labor. Now any capacity adjustment, ma? Yes, capacity increased by 33.33%. 133.33%. Answer? 1,60,000. What next? Production variable overhead. Now production variable overhead amount, please. 60,000. Any rate adjustment, ma? Rate adjustment. Per unit rate, any changes is there? No. Okay. Efficiency adjustment, ma? No. Efficiency only for labor, not for variable overhead of production. Now capacity adjustment, ma? Yes, it's a variable nature. 133.33%. Answer? 80,000. Production fixed overhead. Any working note here? No. 40,000. Answer, please. Two lakh. Not getting more. 3 lakh. 85,000. 260. So here there is a no note points for this calculation, ma. If you have any note points, you have to mention clearly. Okay. The note points are working notes. I presented properly. Registration number 46 here. 25 star exam standard problem. Case 1 you can easily handle, but case 2 is somewhat difficult. Case A is easy. Production budget. There is nothing but problem number 28, I think. Problem number 28 is nothing but case A here. But case B, they're asking P&L account, summarized P&L account. So in a P&L account, what are the elements we have to show? Sales value we have to show, cost of production you have to show, fixed cost you have to show. Sales minus cost of production and fixed cost, you will get a profit or loss. Are you okay now? So if you wanna calculate a profit, you need to find out first values. How you get a values? Units into prices. For units purpose only, they're asking production budget. Are you guys clear now? Illustration number 46. A company manufactures two products A and B, and the budgeted data for the year are as follows. Selling price per unit. Selling price is there. Sales units we have to figure out. Then you will get sales value. Next, direct material cost per unit is provided. So observe, they are not provided per kg, they are provided per unit. Next, direct wages per unit is given. Total works overhead is given. My question, that works overhead is related to the production or outside the production? So if related to the production, you have to consider under cost of production calculation. If it is outside the production, you have to consider admin or selling. Do you understand the logic behind this? Okay. What about the marketing overhead? Within the production plant or outside the production plant? So only three buildings is there in the business ma. One is production plant ma, another one is admin office, another one is sales department. Okay. The production related cost we are incurring in production building. The salaries etc. they are incurring in admin building. Remaining promotions, advertisements, sales related information things we are happening at sales building. Are you okay? Now the marketing overhead is regarding to not production building, it is related to sales building. Okay, then fine. When it comes to the profit calculation, you have to consider all buildings. When it comes to the production calculation, you have to consider only production related information. Do you understand the logic ma? If you want profit, you have to consider all three buildings information. If you want only production, just production building related information. Now, the sales manager forecasts the sales. You can observe the word ma, in everywhere they use a word called forecast. The word forecast represents estimation or a demand forecasting. Now see. So what information ma, this one? Sales information. Okay. So January, February, March, April, May, June. July to next year 1 month also is there. So here is a year means Jan to December, but extra 1 month is there. So without knowing that, we know why they provided next month. Why? Closing stock. For a December closing stock, what is the December closing stock? January into 50%. That is the purpose they provided that extra 1 month information. Clear? Any doubt regarding this? But when it comes to the point, you have to understand for 6 months, different values is there. For next 6 months, same values. The same value is nothing but July 18, August 18, September 18, October 18, November 18, December 18, December. That is a sufficient information. Okay. Let us check how many months they are asking. We don't know na. That's why we can't judge. Based on requirement only, we can judge how many months they are asking. Okay. It is assumed that there will be no working progress at the end of any month. That's the same point given in that problem number 28 also. Next point 2. Finished units is equal to half of the sales for the following month will be kept in a stock. What does it mean by following? Next month only, no? Okay, same logic we used in problem number 28. So opening stock also you already know. So the December value is nothing but December closing is nothing but opening for January. Now there is a no direct calculation, but December calculation is there. What is the December calculation? Jan 50% is a closing for December. The value is reflected in opening for January. Okay, now next. Prepare two things they're asking ma. Production budget for each month and a summarized profit and loss statement for the year ending December. So with calculation we can do easily. With calculation we can easily do. But the thing is they're mentioned specially, I want each month. I want each month. That's why you have to show individual calculation. Are you okay now? So the point you have to understand, నేనేమన్నానంటే ఇక్కడ మొత్తం కనబడిపోతున్నాయి యూనిట్స్, వాటన్నిటిని యాడ్ చేసుకుంటే టోటల్ సేల్ వస్తుంది. అన్నిట్లో 50% తీసుకుంటే క్లోజింగ్ స్టాక్ వస్తుంది. మొత్తం అడ్జస్ట్ చేసినామంటే డైరెక్ట్గా క్యాలిక్యులేటర్లో ఆన్సర్ చెప్పేయచ్చు. బట్ అలా చెప్పకుండా వాడు ఏమడుగుతున్నాడు అంటే నాకు డైరెక్ట్ క్యాలిక్యులేషన్స్ వద్దు, నాకు ఏం కావాలంటే ఇండివిజువల్ మంత్ కావాలంటున్నాడు. దట్స్ వై దే ప్రెజెంటెడ్ లైక్ దిస్ ఫర్ 1 year information. Okay, start ma. Production budget, please speed up. Okay ma, solve this production budget for product A and B. So tomorrow I will explain this concept of summarized profit and loss. Okay, so there is only the important discussion here. Okay, we will continue next class ma.